So let's go to the first question. The composition of the board of directors of MKTBC Limited, an unlisted public company, as on 31st March, comprised of 7 directors, including 4 independent directors, and majority of the members of the audit committee, they have the ability to read and understand the financial statements, but none of them are accounting related financial management expertise. The company has listed its security in August 2019. Referring to the regulations of SEBI LODR, decide whether the existing audit committee can continue after listing its security. So, out of 7 directors, you have 4 independent directors. All of them are capable of understanding the financial statements, but none of them are an expertise. It is listed its security in August 2019. Whether the existing audit committee can continue after the listing of its security. So, as per Regulation 18 of LODR, every listed company shall constitute a qualified and an independent audit committee with minimum 3 directors of members, with majority forming part as independent directors. 2/3 of the members of the audit committee shall be independent directors, and all the members shall be financially literate, and at least 1 member must have accounting or related financial management expertise. So in this case, all the members are aware of it, but none of them is an expert. So the company is now required to have, the company's audit committee has 7 directors as members, which is in compliance because it says only 3 members have to be there. It has 7 audit committee members. It has 4 independent directors. So 2/3 of 4 must be 5. Therefore, the composition of the audit committee has to undergo a change in its listing. Any doubts in this? Any doubts? If there are no doubts, can you please post it in the chat box that you have no doubts? Yeah. So, the next question is, all the members of the committee have the ability to read the financial statements, but none of them is an expert. So here, the requirement under law is that at least 1 member of the committee must be must be a expertise in accounting or financial management expertise. And therefore, in this case, the company is required to reconstitute the audit committee with at least 1 member as financial expertise member, plus it has to increase the number of audit committee members from 4 to 5. Once they get listed, this is mandatory that one must be a financially literate, it must be an expertise. Other members can be a financial literate in the sense that he must be capable of understanding the rationale behind a particular accounting disclosure or a particular accounting treatment. That is a knowledge of fact. But expertise is a subject matter expert who can dwell deep into it and also find out if the management has taken a correct judgment in this regard or not. And therefore, 1 member must be a financial expert. The others can be a financial literate. Literate means the ability to understand. Whereas expertise is a step ahead of them, must be having a domain knowledge of what it is, and must be capable of understanding whether the management has exercised a right judgment while making the financial statement. We'll go to the next question. An investor filed a complaint to a recognized stock exchange against Collex Limited, alleging that the company has changed its registered office within Jaipur city itself in contravention of the provisions of the Act, as no ordinary or special resolution was passed in the general meeting before such change was made. Collex has already replied via email to the aggrieved investor that if the registered office is changed within the same city, it is enough that they pass the board resolution, which was duly complied. The recognized stock exchange on receipt of this investor complaint, inquired into the details and came to know that the company has been incurring losses for consecutive years, 2 years, and got a negative net worth. And they also got a report from the experts, the analysts, that this particular script of Colex Limited is infrequently traded in the preceding 2 years. The recognized stock exchange, after giving an opportunity of being heard, passed an order with respect to delisting of securities of Colex by recording the reasons in writing. At the aforesaid hearing and on the analysis of information and explanations asked by the officials, he came to know that Colex Limited has been indulged in market manipulation also. And SEBI, after inquiring the order, passed a cease and desist order against Colex Limited because the SEBI had reasonable grounds to believe that the company has been engaged in market manipulation. The stock exchange also, in its return on 10th November 2020, to SEBI, the requisite particulars were furnished, but did not furnish the details of delisted securities, believing that there is no need to file such information because the securities have been delisted 1 month prior to that, and 1 month has passed since delisting. Also, in the return, and on the same day for renewal of recognition in Form A, Colex Limited, they paid the applicable fee. Colex Limited was agreed with the order of the exchange with respect to delisting and also the cease and desist order by SEBI, and filed an appeal before the appellate tribunal within that time. The presiding officer was after giving an opportunity, the presiding officer has been charged that he has abused his position to render the continuation of office which is detrimental to public interest, and therefore the government appointed Justice Ram as the new presiding officer. So the question, which of the aforesaid mentioned reasons are valid for delisting? See, the question has very many aspects, but what we're going to see here is whether continuously making a loss is a ground for delisting. No. They were contravening the provisions of the law. They are not contravening the provisions of the law because they changed the registered office from one, within the same city, but one place to another. There is a market manipulation. All that is fine. Market manipulation it happens everywhere. So therefore, the question is, which of the aforementioned grounds can be a valid grounds for delisting? The company incurring losses, the securities have been infrequently traded, therefore there's no point in keeping. The company has changed the registered office in contravention of the Companies Act by not passing a resolution, and none of the above. So of the four, what will be our answer is what we're going to see now. The above mentioned three grounds are not a ground for delisting. Delisting can happen if the company fails to have minimum public shareholding, or the listing has been obtained by wrongful means, or continuation of listing will be prejudicial to the interest of the public, or such other reason which SEBI may record, the stock exchange may do in record, after they record the reasons in writing. So these three are the options that are available. Just because a company is loss making doesn't mean that it has to be delisted. See, they can suspend trading for very many reasons, but cannot delist. Delist is totally removing it off from the stock exchange. Just because that it is not traded, it is not a ground for delisting, and they have not contravened the provisions of the law. So therefore, none of the options mentioned here had any relevance to this particular aspect, and therefore none of the above is the right answer. Any doubts in this? Any doubts? Please message in chat box if you have a doubt. So we'll go to the next part of the question. Whether the aforesaid contention of RSC that there is no need to furnish these details of delisted securities of Colex. Colex Limited is required to file with SEBI as well as others that they have been delisted, and it is the duty of stock exchange to inform SEBI and also the ROC that it has been delisted. So the contention of the recognized stock exchange that there is no need to furnish the details of delisted securities of Colex Limited, is it valid or not? The options that are available to us is no, as it is the duty of the recognized stock exchange to furnish the details of securities during the previous 3 months to SEBI, and 3 months have not passed since delisting. Yes, it is the duty of stock exchange to furnish the details only during previous 1 month, and 1 month has passed. Therefore, the contention of RSC is valid. Partially, yes, as it is the duty of the stock exchange to furnish delisting information for 2 months of those which are listed the previous 2 months, and the 2 months have passed, and the contention of RSC is valid to that extent. No, as it is the duty of RST to furnish only those of 6 months to SEBI, and 6 months have not passed to the stock exchange. So here you must understand the provisions of the law. The law says whatever securities that have been delisted, it is the duty of the stock exchange to file a statement with SEBI of all the securities that were delisted in the previous 3 months, and 3 months have not passed since delisting of security. Now we'll have to understand the distinction. An application for delisting can be done voluntarily by the company, or it can be passed by an order by the government or the regulator. Here, it is the duty of stock exchange to report whatever has been delisted 3 months back, and you will have to report that to the stock exchange within 3 months from the date of delisting. That is what it means, that 3 months have not passed since delisting of securities. So therefore, there are 2 aspects to it. Whatever happened in the 3 months will have to be reported, and whatever has been delisted has to be reported within 3 months from the date of delisting. That is the meaning of the word, and 3 months have not passed since delisting of securities. Therefore, 2 conditions. Whatever has been delisted in the past 3 months, you will have to report, and it has to be reported within 3 months from the date of delisting. That is what this particular clause means. Any doubts in this? Any doubt in this sub question?
No doubt, sir.
Thank you. So we'll go to the next question. Question 3. What shall be the last day prior to the expiry of the period of recognition by which the recognized stock exchange will have to make to SEBI for renewal of recognition in case it could not make the application on 10th November, and what shall be the fees payable? 15th February, 15th November, application is to be renewed within 3 months of expiry, that is 15th May, and the applicable fees is 500. The last is 15th December 2020, and the applicable fees is 500. So the answer to this question is, if it cannot make an application before the expiry of the period that is mentioned, the applicable fee in any case is only 200 rupees, but it has to make an application within the expiry of, it is getting expired on 15th of May. If it is 15th of May, then 15th of May to June, to July, to August, to September, to October, to November. So therefore, you have 6 months time to make the payment as well as renew your recognition. Here, it could not make an application on 10th November. So the question here is, it could not make an application on 10th November. So what is the latest day on which it has to be made? It has to be made before 6 months from the proposed expiry of time, and therefore 15th November, which is 6 months from the date of expiry, you have 15th November 2020, within which you will have to make a you'll have to make an application to the government for recognition. This is in respect to recognition of stock exchange, not recognition of the security. What shall be the dates of Colex Limited would have filed appeals against delisting order, assuming it has filed appeals on the last prescribed day against both the orders? As you may see from the question, I'll have to run back to the question, which is going to take time. So if you read the question, you will understand that the 1 minute, I'll go to that page. See, the cease and desist order was passed against Colex Limited on 5th October 2020. Right. So let's go to the question. So the question for us is that there has been a cease and desist order passed and also has been delisted. So what is the time within which the what shall be the dates? It would have filed appeal. So the question is that you need to mark, you'll have to go back and do a working and find out. The first point, both the orders is delisting. First is delisting, then is the cease and desist order. So for delisting, it is 1 month before that, because you have 30 days time to file an appeal. Therefore, it could have filed an appeal on 23rd September. And in respect of cease and desist order, you have 1 more month to file. Therefore, it is 19th November 2020. This particular slide is irrelevant to you. So therefore, 3. SEBI received complaints from some investors alleging that ABC Limited and some brokers are indulging in manipulation of price manipulation. Exercise the powers that can be exercised by SEBI under the Securities and Exchange Board of India in case the allegations are found to be correct. So, what is the duty of the stock exchange and SEBI whenever there is a market manipulation? Generally, price manipulation is considered to be completely illegal. It is fraudulent and it is an unfair trade practice as per SEBI. So SEBI has got power under section 11(4) to suspend the trading of the securities. That is, straight away say that, see, this is not delisting. Suspend is that it will be available in the list of the stock exchange, but you can't trade that security. Second, whoever has involved themselves in the market manipulation can be restrained from accessing the capital market, whether buying, selling, or dealing in security. Not only him, also his associated persons will be restrained from dealing with securities. But this is to be given after an opportunity of being heard. The classic example that we have today, that we can all see today, relates to the one which was alleged to be an unfair trade practice or a market manipulation made by Poonawalla Finance in the recent days, where SEBI has restrained the erstwhile managing director from accessing the capital market. The allegation is that prior to its acquisition and all that, there's some price sensitive information that has gone, by which time these people were able to make some undue profits because they are insider to that information, whereas others could not. So it is a loss to others, but gain to somebody because he's had access to those information which others did not have. So that is typically what is known as market manipulation. So the options that are available to SEBI is to suspend the trading, but they will not generally do, because if I suspend the trading, the entire lot will get affected. Therefore, they will restrain the persons who are involved in market manipulation to deal in the capital market. They cannot buy, sell, do anything, not only in respect of this stock. In respect of any stock that they hold, it will all be freezed. That's the power which SEBI has today. It shall give an opportunity of being heard. However, the inquiry proceedings will be as per SEBI. This is only, the above two were only civil in nature. there is an additional penalty that will also be made. That is, if you have made an undue gain, then you will have to refund the undue gain to the investor education fund. And the fine may extend between 5 lakhs and 25 crores or 3 times the amount of profits that these people have made, whichever is higher. So therefore, market manipulation is considered to be completely fraudulent under the SEBI Act and the rules made thereunder, especially with that of insider trading. Also, no person shall directly or indirectly. Directly is using yourself, and indirectly is using through your benamis, the related parties or persons acting in concert. You cannot use or manipulate or use any deceptive device in connection with these securities. You cannot, your computers will be seized, your laptops will be seized, your iPads will be seized, your market terminal will be seized, and it shall, wherever it finds that the person who continues to manipulate, despite being, not only the person who is directly doing it, but also any person who indirectly helps him to do that, the penalty is 1 lakh and which may extend to 1 crore, besides a refund of the excess profits that you have made. So next question is SEBI on a complaint that Mr. Mehta, the Chief Executive Officer of X, on the basis of unpublished price-sensitive information, has been included in it, has been indulged in trading of securities. Examine on the basis of said finding what SEBI can take against Mehta under the SEBI Act. As I said earlier, example of Poonawalla FinCorp's MD, he or any other person or he authorizes somebody to deal with will be debarred from the dealing with the capital markets. This is not only in respect of price-sensitive information, both published and unpublished. It can call for any other information that is required, and not only he employs somebody to get this information and then publish the unpublished price-sensitive information. All these people shall be liable to pay a penalty of 10 lakhs minimum, and which may extend to up to 25 crore or twice the profit made out of such transaction, whichever is higher. So in this case, if he is gained unduly arising out of an unpublished price sensitive information, the person has to refund the fees, has to pay a penalty, and the penalty can extend anywhere between 25 crores or 3 times the profit made, whichever is. This question has already been seen. The only additional thing is, can audit committee continue after listing its security? The audit committee shall not have, this is just a continuation of the first question. The audit committee has to undergo a change. This has to be reconstituted. The same audit committee cannot continue to function. 5 members, that is from 4, it has to induct 1 more member, and any one of the 5 must be a financial expert.